Welcome to CoinVantage. Today we're exploring the financial powerhouse BlackRock. If you're curious about how big players shape our world, hit subscribe and join us. We're CoinVantage, your guide in the world of finance. Let's dive in. What if I told you that one firm had a significant impact on every single company you've interacted with so far today? BlackRock. Now, you've probably heard of BlackRock. A quick search on YouTube will turn up dozens of videos claiming that this one corporation controls everything. However, things aren't nearly as lovely in practice. Let me tell you why all the rumors concerning BlackRock are false. Among the world's most powerful corporations are holdings held by the investment firm BlackRock. All throughout the world, they hold assets worth a whopping $10 trillion. A single corporation controls an amount equivalent to half of the United States' gross domestic product. It's tempting to write off such a formidable conglomerate as completely evil. Yet the fact remains that BlackRock isn't directly or indirectly involved with any of these businesses. The clients are the true owners of the shares. BlackRock merely acts as a manager. BlackRock does, in fact, have some sway over these businesses. That much is certain. Companies may seek to maintain BlackRock's favor in order to avoid having their investments withdrawn, given the massive volume of shares that BlackRock controls. Although BlackRock may not be as bad as many say, there is still something very fishy about them: their hypocrisy. Larry Fink started BlackRock 34 years ago, and in just 5 years, the worth of the company increased from $5 million to $8 billion. This was mostly due to Fink's management of the money invested by huge institutions such as pension funds, university endowments, and the extremely wealthy. Business magnates and international leaders pay attention to Fink now as he serves on the International Economic Forum and the Council on Foreign Relations. His corporation is on the verge of consolidating enough power to govern the world. The rate of decline in this market is something we need to discuss. This was the worst trading day for Wall Street since 1987 meltdown. Ironically, BlackRock was able to seize a tremendous opportunity during the 2008 financial crisis. It took over a number of the failing banks after securing an uncontested contract to do so. Already filthy rich, Larry Fink gained even more influence and access to the US government as a result of it. It was a similar story in 2020 when the government enlisted BlackRock's help to shield the Federal Reserve from the financial consequences of the epidemic. Much of BlackRock's success came during times of economic uncertainty, and the old adage says something like, "With great power comes great responsibility." BlackRock would have you believe that they are living up to that adage. While the globe was fuming over George Floyd's murder in the summer of 2020, BlackRock issued a statement demanding that businesses have a social mission and announced that they would be assigning an environmental, social, and governance score to each corporation. Businesses that pledged to increase diversity in leadership and recruiting, as well as those that provided green policies and technologies, fared better than those that did not. Although the idea of ESG investment has been around since 2004, BlackRock became the most vocal advocate for it in 2020, and it was effective. Despite being the fastest growing market in the asset management industry, ESGs were preference in less than 1% of earnings calls before this announcement. By May 2021, that percentage has risen to roughly 20%. More and more people care about how businesses affect society and the environment. Isn't that a positive thing? That advantage goes to socially conscious businesses. In a perfect world, certainly. Nevertheless, we are all aware that our current reality is anything but. Even though things have gotten better, more corporations are engaging in greenwashing and professing to be more sustainable, diverse, or responsible than they actually are. This is mostly due to BlackRock's ESG statement. Additionally, it has shown BlackRock's hypocrisy, since the firm boasts about being an advocate for environmental, social, and governance investing, but it is still the biggest investor in fossil fuels, profits from war, and has a cordial relationship with countries that violate human rights. Not only does BlackRock engage in this practice, but so does Vanguard, the world's second largest investing corporation. While advocating for ESG investing, you remain hesitant to divest from oil and gas firms or those with dubious human rights policies. securities. Repeatedly, BlackRock does something that makes sense to the general public, but they are secretly hesitant to change their investments, regardless of how much society would benefit from them. Consider climate change. According to BlackRock, investing in businesses that aren't taking action to combat the issue is problematic since climate risk is an investment risk. In 2021, BlackRock contributed to a board shakeup and thereby accomplished something about it. The oil and gas giant has recently instituted new self-imposed regulations to help bring its emissions down from 2% of the global total. Although this is a commendable step by the firm, it seems more like a show of good faith than an effort to actually affect real change, given that it is still the largest investor in fossil fuels. The investment firm BlackRock has condemned gun violence and demanded that the gun industry do more to prevent mass shootings in the United States. On the other hand, who is the biggest bagger of gun manufacturers? Well, BlackRock, as you might have expected. Among many manufacturers that this investment firm backs, Strum Ruger accounts for 16%, outdoors for 15%, and many more besides. Although BlackRock claims to have conversations with these companies on safety, it is still not apparent if any policy changes have taken place. Global arms companies such as General Dynamics, Raytheon, Lockheed Martin have received billions of dollars from BlackRock's U.S. Aerospace Defense Fund, which is based in the United States. They're lending their support corporations who utilize taxpayer funds to fund global conflicts and atrocities after receiving massive contracts from the Pentagon. In the guise of peacekeeping, many countries acquire weaponry from the United States. For example, Saudi Arabia utilized American weaponry to target innocent civilians in Yemen during the country's protracted civil conflict. It is apparent that BlackRock consistently avoids its own human rights obligations by funding the expansion of war and the proliferation of nuclear weapons, and so thus its dealings with tyrannical regimes. Some are questioning what Fink promised Chinese President Xi Jinping in exchange for access to the Chinese Communist Party's fund, now that BlackRock is the first global asset management company to have access to China's mutual fund. Even though it's unusual for a U.S. company, BlackRock has been the most effective in establishing a foothold in the contentious terrain due to its extensive power. However, it's not the only investment firm seeking to do business with China. In China, we witness firsthand how BlackRock prioritizes financial gain before human rights, despite the fact that it claims to be an ESG investor. Over the years, it has invested in some of Russia's most prestigious enterprises. Russia has received $630 billion from British pensions managed by BlackRock. Russian President Vladimir Putin's 2014's invasion of Crimea sparked a long-year conflict in Ukraine, prompting BlackRock to reevaluate its assets in the nation. However, the investment firm quickly returned to its position as a top shareholder in Russian firms. Last year, it became apparent that Russian President Vladimir Putin was planning an invasion. Despite this, BlackRock remained steadfast. Once the war broke out, the company followed the lead of most Western firms and withdrew its assets from Russia. However, it is worth considering the amount of money that BlackRock has poured into Russia over the years, money that the authoritarian government had used for its expansionist ambition, which ultimately led to this horrible war. The issue that arises from all of this is how did one firm become so powerful and influential on a worldwide scale? Technology has the starting point. However, exchange-traded funds are the foundation of BlackRock's business model. To lower the overall risk for investors, an ETF includes a variety of assets. An investment in a mutual fund allows you to diversify your portfolio across equities, commodities, and other assets, rather than purchasing shares in a specific firm. In the 1998 creation of Aladdin, a portfolio management program was a major factor in the enormous success of this strategy for BlackRock and its investors. Aladdin keeps track of details about everyone who has ever given BlackRock money, whether they were aware of it or not, and he can foretell the potential results of every investment. The software can then use this information to calculate the profitability of an investment failure. This technology ultimately propelled Fink and BlackRock to the top, where they remain today as the preeminent firm for ETF investing, a trend that shows no sign of abating. Assuming current trends continue, global ETF assets assets might reach $25 trillion by 2025, giving BlackRock access to even more wealth. However, the influence that BlackRock possesses will be seen far earlier than 2025. At the moment, BlackRock is responsible for assets that are worth 10% on the global economy. Since BlackRock owns such a significant portion of Fox, Comcast, and Disney, the company is required to advise them before making any significant decision. The largest investors in worldwide behemoths like Amazon, Google, and Facebook are huge investment organizations like BlackRock and Vanguard. An anti-competitive atmosphere is created by this degree of ownership. The cost of plane tickets reflect this, due to the fact that BlackRock and Vanguard are two of the three largest stockholders. There is no motivation to cut pricing in order to compete. Consolidation of this kind limits customer choice, drives up prices, and increases the likelihood that a small group of wealthy individuals would one day control more sway over financial decisions than the CEOs of the companies whose stock they hold. This level of ownership concentration is undesirable, according to even Vanguard founder Jack Bogle. The world of economy will suffer if a small number of people get an excessive amount of wealth. To prevent big corporations from amassing too much power, governments could implement certain measures. Examples include limiting the voting power of funds and ETFs as shareholders and instituting ownership limitations to limit the amount of stock that any one entity can own. It is possible to impose regulations that restrict the level of influence that investment firms have over the enterprise in which they have invested, regardless of whether such influence is charitable, as is the case with ESG or not. Just how quickly, though, might this all take place? Due to the fact that BlackRock and Vanguard are on the verge of handling $20 trillion in assets, which, if completed within the next decade, would completely disrupt the asset management business, further consolidate the control of the biggest corporations in the world, and drive up prices. The greatest approach to invest our money today might lead to a disastrous future for our money and society tomorrow, due to the vicious loop that ensues as BlackRock's management fees decrease in proportion to the amount of money it handles. That kind of foresight is unfortunately out of reach for the majority of people. All that counts is what appears excellent in the near future. Just like that, BlackRock becomes rich. It claims to be a responsible business, yet it acts hypocritically when it comes to issues of diversity, human rights, and the environment. It believes you'll ignore this. Investors' indifference to these matters is crucial to its survival. The issue lies in the fact that few of its backers are unaware that they are backers. All they are is a component of the one of the endowments or pension funds that BlackRock oversees. One way to avoid the ethical traps that big corporations like BlackRock put investors in is to invest in smaller funds that support environmental, social, and governance investment without conflicts of interest. Another option is to manage our own shares. However, it is simply more convenient to use these services, as much as the majority of us rely on Amazon Prime for a last-minute necessity. The public's perception of large corporations has deteriorated during the last decade. In the wake of that spotlight, BlackRock ramped up its efforts to get the word out about its mission to improve the world. BlackRock's deceit will persist. It is our duty as investors and consumers to be aware of the situation, even though the company's public image and its private acts will inevitably clash. Even while it's easy just to take them at their word, BlackRock is counting on you to do just that. To this point, it is how they have progressed. This same lack of knowledge enabled governments and banks to ensnare us in a mountain of debt. Thanks for joining us on this deep dive into the influence of BlackRock on the global financial stage. Understanding the dynamics of major corporations like BlackRock is crucial for both investors and the general public. If you found this video insightful, consider subscribing to CoinVantage, our channel dedicated to finance, investments, and the broader economic landscape. Don't forget to hit the like button, share your thoughts in the comments, and stay informed for a better financial future. Keep an eye out for more compelling content from CoinVantage. Happy investing!